FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network, and we should call it the Weather Survival Network or the Weather Forecast Survival Network, because we survived it very well down here in sunny South Florida. It's not that sunny out, but like everything else in life, there's hype, and then there's ultra hype, and then there's the weather. And that's what we were subjected to for the past week. And God, a slow-moving storm. Who would think it could be such a bonanza for the media, for the advertisers? But anyway, here we've got a storm with us who is anything but slow-moving and guaranteed to shake up the markets. I'm talking about none other than Mickey Fulp, the mercenary geologist. And it's time for Mickey's Major Market Monthly Review, or I should say it's time for Mickey Fulp's Monthly Major Market Review. And this is for August of 2019. We had so much going on in August, Mickey. Like, these charts here make your head spin.
Well, Kerry, you're right. I move fast, but I talk slow. We had a middling month for all the markets after we came off highs in very early August, up and down depending on the trade wind currents, trade war wind currents, whatever you want to call them. Plus or minus economic data, good to middling all month, very good Q2 earnings. But the markets went up and the markets went down. A lot of it has to do, I think, with the mainstream media promoting the idea of a recession pending, put a little fear into the markets. Anyway, Dow came off those record highs early in the month, closed at 26,403, down 1.7%. S&P 500 lost 1.8% at 2926. NASDAQ, the fangs are coming out of favor for good reason at 7962 for a 2.6% loss. And finally, the Russell 2000, the small cap index, is still underperforming the major markets, closed at 1495, down a whopping 5% on the month.
That's a big move. Hey, let's look at it. It is. Yeah, looking at the Canadian markets, somewhat unfazed.
Well, Canadian markets are lagging all around this year, but Toronto Stock Exchange was up incrementally, 16,442. That might have something to do with a robust gold price. Toronto Venture Exchange, despite gold going up, there is absolutely no interest in the juniors yet. Closed at 589, off 3%. One of the things kind of holding back or muting Canadian markets right now is an October election when they're going to de-elect their socialist president, the ski bum. And finally, with China slowing, it cannot win a trade war with the U.S. That's becoming more and more evident. We said that ad infinitum for about the last year and a half. It closed at 984, also down a whopping 5.1% on the month. And finally, the VIX. All these things that we had going on this month, including geopolitical intrigue with Iran and tankers in the U.S. and China and at all, the VIX has gone up, closed the month at almost 1898, but it spent most of the month with higher volatility in this upper teen to low 20 range.
So, Mickey, about the trade war, I'm inclined to agree with you. You think China's making a big mistake betting on the outcome of Trump's defeat in 2020?
Well, it's increasingly apparent, I think, that they are hanging their hats on that they're going to have somebody easier to deal with in the White House in, a year and a half or so. I think that remains to be seen. But they're apparently choosing to roll the dice on that. We'll see if their economy can hold up long enough. And I haven't mentioned this, but Harry, I'm not a guy that generally is afraid, but I try to look at markets and look for potential catalysts or black swan events, and these problems in Hong Kong are very serious, and I don't think the U.S. or the UK are going to look very kindly on China trying to clamp down on the few freedoms that the people in Hong Kong enjoy by not being directly under communist rule. So,
great point.
I'll go on record right now saying that could be a black swan event that could shake up world markets considerably going forward.
Yeah, and just to elucidate that a little bit, what the catalyst that set off all this unrest in Hong Kong was the extradition law, that there was going to be a law that they could extradite so-called criminals, political and otherwise, to China. And that was where they put their foot down and said, no, that's the end of Hong Kong semi-autonomy, and that's the end of the rule of law in Hong Kong. Now, the governor who's appointed by the communist regime of Hong Kong, Carrie Lam, has backed off of that. This is a potential disaster of unknown proportions for the ruling elite of China, because now they're going to be boxed in. All they've done is lit the fuse or further enraged the Hong Kong people to ask for more. Anyway, we're not a political thing, but I think that's an important consideration for the markets. And like you said, Mickey, that could be the black swan, and it's carrying out into the money markets. Let's talk about them next.
Well, DXY, the U.S. dollar index, continues strong. It's actually gone above 99 a few times, hasn't really held there, but it seems comfortable now in this 98.5 range. Closed the month at on the top end of that at 98.9, up incrementally 35 basis points. But this is the high we have seen for over 2.5 years. Last time we saw DXY this high was during the commodities crash in late January of 2016. The euro, of course, is down as above, really affected by negative interest rates. Imagine putting your money into a European Union bank and having to pay them to hold your money. That makes no sense at all. Or taking out loans at negative interest rates. That does make sense, but not from a bank's point of view. And finally, we'll look at that I'm looking right now. It's been since late March of 2016 since we've seen a DXY as low as 1.10, and that was a roundup. Let's look at the 10-year Treasury. We are at a 3-year low at 1.5%. That's a 26% drop from over 2% to 1.5% on a very dovish Fed. It's good for gold, and we'll talk about that in a minute. And finally, Bitcoin, it lost all its volatility this month, Kerry. Yeah. It only lost 5%, 4.5%, but it did close below 10,000 at $9,558 for a single Bitcoin. Yeah, I'm not buying.
No, you're not buying? Well, you could sell. You don't have to own them.
I don't own any.
Yeah, so well, there's futures. You can sell a futures contract, Mickey, but I wouldn't go to sleep with it still open. I'll tell you that. Well, something else that's been volatile. Let's look at our metals, and before we're done, we need to talk about platinum. But in the meantime,
FSN Radio. It's all about what's next.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. The company is focused on its Candelaria mine project in Nevada, where there is already a historic resource estimated at 127 million ounces of silver. The Candelaria mine historically was the highest grade silver producer in Nevada, generating over 68 million ounces of silver at an amazing average production rate of over 1,250 grams per ton. One. The project has tremendous expansion potential as past drilling has outlined deeper, high-grade silver targets for future drill programs. Silver One is highly leveraged to the price of silver and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com.
The Financial Survival Network. It's all about what's next.
Well, gold hit a 6.5-year high, and it continues to go higher. Closed the month at 1523, up almost 8%. Big performer on the month was silver. We knew this was bound to happen with skewed ratios. It was up to 1832 for a almost 13% gain, but it still is lagging behind. It's got a long ways to go to normalize these ratios. Platinum, 3 months ago, we called it triple bottom. Below 800. It has soared, closed the month at 932, up over 8%. These triple bottoms have real meaning in markets. And palladium actually was up 1%, had a very volatile month, went below 1400, challenged its all-time high, which is 1580 or something. It closed at 1515, up 1% on the month, but it's still too high and it needs a correction. I'm going on record right now about that. Finally, copper markets continuing to muck about. An increasingly weak copper price closed the month at 257, down 11 cents on the month. The trade war has beaten up the entire base metal complex, with the exception of nickel. And nickel hit a 5-year high. The reason for that is the Indonesians are clamping down on concentrate exports again. Won't these people ever learn?
No.
In third world countries.
You know better.
Anyway.
You know better than that.
I could go on another rant about that, but we'll save that for some other time.
You know better. But look, let's look at platinum, because you and I have been following this extremely closely for years. And we should mention it's getting close to the 1,000 mark in September. So it's on a rally here. And it looks like all of a sudden the world has discovered platinum, Mickey.
Yeah. Well, Kerry, we said, what was it, when it finally reached par here, whenever that was, and I'm checking my notes.
Years ago.
You told me it was going to hit par at some point, and with gold, and I said, I don't see that coming anytime soon. And it's been below par with gold, which I was challenging your idea that was ever going to happen since December of 2014.
Correct.
And so now that ratio, we'll just go ahead and talk about that ratio, is 0.61. It came off its all-time low, monthly low at, actually a daily low. It actually hit 0.57. So it's improved a bit, but look at it. It's still got a long ways to go. And so you got to remain bullish on both the platinum price and the silver price based on historic ratios.
Absolutely. And we don't have time for it now, but I actually talked to somebody who worked with the World Platinum Council, got the skinny on why they're not converting the catalytic converters back to platinum, even though it's been a third or 40% cheaper than palladium. It's got to do with regulatory matters and the fact that they're taking engineering horsepower away from internal combustion engines and putting it onto electric vehicles. So they basically just don't care. And that's why you haven't seen a switch back to platinum, even though it's a better catalyst than palladium. And even though it's been way, way cheaper than palladium, it's not enough of them. They don't want to go ask for regulatory approvals to switch back.
Yeah, I'm going to look into that. I may challenge the idea that there are regulations that actually tell you how much platinum you can use in an a gasoline catalytic converter compared to palladium, because my OEM contact who spent 30 or plus years at General Motors and OEMs that supplied General Motors, he basically has told me time and time again, it depends on the car. And different cars have different formulas. If the EPA is regulating, now this would only be in the U.S., Kerry.
Yeah,
if the EPA is regulating the amount of platinum and palladium, that the ratio of that in a catalytic converter, then the Trump administration needs to roll back that regulation, in my opinion.
I agree.
I do know that there is some movement that to use more platinum. I would think, and I'm just speculating right now, a lot of it has to do with the fact that it's such an incremental a change that the dollar amount is not important to these OEM manufacturers. I think it ultimately comes down to economics.
Well, that's what I was told. Whether it's true or not, I can't tell you. But this is what somebody from the Platinum Association told me. But let's find out more about it, and we'll report back next month with our findings here. And
hey, I want to interrupt you here. We had a listener request to you for exploration and mining information in this show, and although we would love to do it, the show is long enough already, and this show is not really geared toward what I do normally, which is exploration and mining and stock picks. Number one, this is syndicated to Kitco. They won't take our show if we have stock picks, and if the guy wants information from me, all he needs to do is go to my website, sign up for free, gets my stock picks, etc. So I've turned a request into an ad at mercenarygeologist.com.
All right. Hey, and yeah, you'll get all the information you need. Like Mickey said, it's kind of deviating from our purpose and will interfere with syndication, so we can't do it. All right. So I guess we're on energy now, Mickey.
And thanks to him for the request, but we've got different things for different shows. So
exactly.
Energy. The oils over the month were much like the markets, quite volatile, but really range bound. WTI ended up the month down almost 6%. Lost $3.50 or so. Here's an interesting input here. As rigs are down and have been. Rigs are down something approaching 150 drill rigs, maybe more now, less than last year, but our production, U.S. production, continues to climb. All-time record last week at 12.5 million barrels as OPEC production continues to fall, not only with their prescribed production cuts, but also with shortfalls by Venezuela and Iran as sanctions take effect. So Brent also followed suit, closed at 60.43, down almost 7% on the month. Henry Hub actually was up 6 cents, but closed at $2.29 for the month. But there really is no hope on the horizon for natural gas. We have a glut in the U.S. There has been no hope as I look at prices going back for a decade since the crash of 2008. There's just been no hope for natural gas markets. And I don't see that changing. Finally, uranium closed at 25.30, down 8 cents on the month, yada, 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 blah, blah, blah. That market's not going to change until Section 232 final resolution comes out in about 6 weeks. We'll see what the Trump administration chooses to do.
Yep. That's on the horizon, no doubt. Be interesting. And finally, ratios, really the only two ratios we care about this month are the gold to silver and the platinum to gold.
Well, they're still skewed to the upside for gold and silver. Came off its high of 92.5 a couple of months ago, closed at 83. But bear in mind, the median and the mean for those averages, for that average is somewhere around plus or minus 55, 56. And we've already talked about platinum gold ratio, normally well above 1. Still came off its low, but still at 0.61. So a long way to go for those metals, platinum and silver. And if you are bullish on the precious metals, I would suggest those are the ones you could put your money in physical bullion.
Yeah, limited downside potential. I mean, God, getting a ratio of 92 to 1 is pretty unheard of. Doesn't happen very often, and it never
2% of the time, Kerry, since 1970,
and it never holds. Right? It never holds. But we will have to hold till next month. So check out Mickey's site, mercenarygeologist.com, and his Twitter handle is at mercenarygeo. Check us out, financialsurvivalnetwork.com, and our Twitter handle's at Kerry Lutz. Mickey, we will talk to you again. Perhaps we should do a special show on platinum, really explore the intricacies of that market, because I have a feeling we're going to be seeing a lot of activity there in the months and years ahead.
Yeah, and I bought a tranche of Vienna Philharmonic platinum coins around the first of the year when it hit a double bottom, and I'm pretty happy with that purchase right now, Kerry.
Hey, good move, Mickey. Hey, and if you're holding silver, you're doing great. Anyways, Mickey, till next month.
All right, thanks a lot, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.